What's going on, everybody? Welcome back to the channel. It's Millennial Trade. So I got a little market update for you guys. We're going to talk about the inflation. We're going to talk about why the inflation came in good, where are some of the areas that Americans are feeling less of the pinch. And we're just going to kind of go through some of this. I want to talk about the Federal Reserve's rate hikes or the anticipated rate hikes. And I also want to talk about the inflation target of 2%. I mentioned this in a video a couple of days ago, but this is important, and I want people to understand the 2% inflation target. It's not actually 2%, it's an average, but we're going to discuss that in a couple of minutes. And then I've got some news about basically Joe Biden. Well, we're going to hit the crypto real quick and the FTX and Sam Bankman-Fried, but we've got Joe Biden yesterday threatening to investigate Elon Musk. All right, so let's go ahead and get through some of this here. S&P and the NASDAQ had amazing days. This was actually, according to one headline, like we haven't seen a day like this in the markets for almost 2 years now, I believe. I'm trying to find the headline. We're going to go through all this, but yeah, I mean, the Dow Jones is up nearly 1,200 points. S&P 500 is up 5%. The NASDAQ futures were definitely up about 5%. And yeah, it's the biggest rally in 2 years on the inflation data. Now, I did a video that I want you guys to go and watch earlier today. It's about my trade. I positioned yesterday for like the swing trade, right? Anticipating that inflation was going to come in a little bit cooler. I had reasons to believe so. Auto prices coming down the last few weeks, some of the commodities, there were things to be bullish about on this inflation report. It was a little bit of a gamble. I put about $1,500 into the trade and came out today up almost $7,000. So it took one night to make $7,000 on this, trading these macroeconomic events, the inflation reports. So I do think long term it could be a profitable strategy if you can time these things correctly, right? What if I had gone short? What if I thought the inflation was going to come in super hot? I would have gotten completely burned. And I'm sure there are a lot of people out there that, unfortunately, were short on this move. But these moves were epic. I mean, if you look at the fintech, especially because that's what I follow, or Amazon, some of these big tech companies, the moves were absolutely epic. And this is how it happens. They happen, pretty much when you don't expect it. We had basically capitulation the past few days, and look at the markets now. So up 5%. But Bank of America says, inflation could take until 2024 to fall to 3%. So just keep this in mind. This whole inflation thing and getting the inflation down and the interest rate hikes, we could be looking at another year of these sort of market conditions, if not longer. So with the inflation report, you had core inflation, which we really needed to come down. I think that was at 0.3, so it's down from like 0.5 or 0.4 last month. Still elevated, still technically rising, but the rate is coming down. The rate of the rising in core inflation came down this month, which was great. And year over year, I think we're at 7.7. Everybody was hoping for 7. I was hoping for 7.9. That would have been, good enough for me to make a couple of grand. 7.7, I'm up fucking 7K. I got rid of my contracts. I was holding a lot, and I got rid of them right at the open. Right at the open. And that's the thing, guys. Sometimes, sometimes these things can have delayed reactions, and the contracts, even though we had gapped up on PayPal, and I'm not going to sit there and hold this and hope that it goes higher, right? I'm up. I'm going to get out and enjoy the rest of my day. But I did check the contracts, and they were almost at 400 by the end of the day because PayPal ended, up at the highs. So PayPal had a very, very good day. But some of the areas that we saw relief on the inflation was like household supplies, used car prices, right? Clothing and accessories, apparel is even down. I've been buying some apparel myself. Household gas, a slower increase in food prices. Now, that doesn't mean that food prices are not increasing, they are, but the rate, again, is slower. And this was all good, at least for the report. Now, we don't know what next month's report is going to look like. Anything could happen. And we could still hit 10% inflation at some point in time. Some people are calling for that. I'd like to think the Fed has this a little bit more under control. But Fed officials welcome inflation news, but still see a tighter policy ahead. This is from CNBC. Federal Reserve officials welcome Thursday's news that inflation might have peaked, right? Key word, might have peaked, but caution against getting too excited, right? It's far from a victory, says the San Francisco Fed president, Mary Daly. The Dallas Fed president, Lori Logan, called the CPI report a welcome relief, but noted that more rate increases probably are coming. So Jerome Powell could, he could come in with 75 basis points still. Maybe he comes in with 50 basis points. Maybe they do a couple of 50 basis point rate hikes because they've already done 4 75 basis point rate hikes. But, some people are calling for the terminal rate, where they want to take the rate ceiling to 5, 5.3. I've even seen 6 out there. Could be higher than that. Maybe interest rates need to go way high for us to long-term get rid of this inflation issue if it, persists. But we got a good report, so that's great news. A lot of people made money today. The markets are up. My portfolio is up. Probably your portfolio is up. So, it's all good, at least for now, right? We got to monitor these things daily. Inflation report leaves Fed on track for a 50 basis point. This is weird how they have it. A 0.5 point rate. No, it's 50 basis points raise in December. I can't talk. This headline makes no sense. Inflation report leaves Fed on track for 0.5 point rate rise. And you guys understand what they're saying, right? So this is a little bit optimistic from the Wall Street Journal. Maybe they're trolling all of us, and Jerome Powell is going to come out with, the usual 75 basis points. Then you've got crypto billionaire Sam Bankman-Fried. I mean, this guy was supposed to be J.P. Morgan of the crypto space because of the fallout from FTX. I don't know all the details, but it's bad. It's not good at all. Apparently, there were like $8 billion on this exchange of depositors' money that we're trying to transfer back out to their accounts, $8 billion worth. And Fried doesn't have it. The company didn't have it, right? So where did those funds go? Well, Fried apparently was using billions of customer funds to prop up his own trading firm. And a lot of sketchy stuff going on here. I mean, you really got to be careful about this kind of stuff. This is one reason I'm so hesitant, especially with these altcoins and these alt exchanges and all that kind of stuff. It's unregulated. We don't know really who the scammers are. Apparently, there's lots of scammers in this space. And this is why I like the stock market, because the stock market, it is regulated. There's some sort of rules and law to it, like law and order amidst the market chaos. With crypto, it's just chaos. Bitcoin down to $15,000, back up to $17,000. I feel bad. And you see the crypto guys, right? You see them everywhere on YouTube, doing the hopium streams, and I see a lot. I think Jason Pizzino says, "No way, Bitcoin's going to 10K." It's not happening. He literally said this on his podcast, on his live stream. I don't have one investment where I don't think it's a possibility it could go to zero. Okay, so that, I think sometimes the crypto bulls, they're so bullish and they're so convicted in the technology and just what crypto represents, it's hard for them to see the downside. And I think, with the stock market investors and the crypto investors, we've all been struggling with that this past year. But Sam Bankman-Fried is, his net worth, 94% of his net worth just gone. I mean, he's still worth hundreds of millions of dollars, apparently. But, there was another guy, Tom Brady. I think he's a football player or something. He got caught up in this FTX fiasco, and now maybe his net worth is gone. So the question is, how many other people and what other people, right? What big, bankers or fund managers, hedge funds, who had exposure to this, and who's holding the bag? Sam Bankman-Fried is out, right? billions of dollars in customer funds gone, right? And now FTX, I guess, is offline. Binance was going to come and buy it, and then they decided not to. They were also supposed to buy Voyager, which I almost invested in. Thank God I didn't. But Voyager's down like 90%. That may never come back. And so this whole crypto world, these crypto exchanges, extremely sketchy. These guys are taking depositor funds and then trying to trade with it themselves. And this is, the result. From Voyager to Miami, FTX implosion leaves crypto world in limbo. But it's not just the crypto world, because depending on who has exposure to all of this, it could get very, very real. But Sam Bankman-Fried blames himself for FTX's collapse, admits he effed up. I mean, I've effed up to before too, so I guess I shouldn't be too judgmental. But when it's billions of dollars in customer funds, supposedly, this is a big issue. And anyways, about the inflation target, by the way, I skipped over this when we were talking about inflation. I need to go over this again. When it comes to inflation and the 2% inflation target, the way that's read or the way that's spoken sometimes, it sounds like the Federal Reserve wants the average rate of inflation to be, or wants the rate of inflation to be 2%. But it's actually an average rate of inflation of 2% that the Fed is actually targeting. They're not targeting 2%, and I used to believe this. They're not targeting 2% inflation rate every year. They're targeting a 2% average, and this is the key, over many decades, possibly maybe a century, right? If the Federal Reserve can keep us at a 2% average over a century, what does that mean for us right now? That means that because we were running so low, supposedly, right, according to the Fed, all these years, we were under their 2% target up until, after COVID and all that. Because we were under the target, this means for us that the Fed needs to keep inflation elevated for a number of years to bring the average closer to 2. So they're going to hold inflation as long as they want, as high as they want, until they're satisfied with a 2%, average. And for us, that depends, are they going for over 10 years, a 2% average, or are they going for a 20-year 2% average, 30, 40, 50, 100 years? They don't tell us these things. There's no way for us to know. So keep that in mind, that the inflation target is not 2%. Right? We're at like 7.7% year over year right now. They'll let that run if they want to. And as long as there's not mass panic in the streets, right? As long as there's not rioting and, I guess people banging on the door of the Federal Reserve like it's January 6th. As long as that's not going on, I don't think the Federal Reserve really cares about what happens, how this affects the American people. As long as the Federal Reserve is confident that the American people can absorb these higher prices, absorb the lifestyle of dealing with higher inflation and, not causing too much political instability, they're going to run it as hot as they possibly can to get their average up to 2%, not the target. The target is not 2%. It's a 2% average. So keep all of that in mind, okay? I'm going to keep harping on this because it's extremely important. With this information, you realize that we could be in this for years to come, because we were running so low against their average. And then the last thing I want to look at here, because, this video is getting a little bit long. I can't keep these videos under 10 minutes. Joe Biden last night was asked by a reporter at some event if Elon Musk is a national security threat. And what Joe Biden said will blow your mind. His exact quote was, "I think Elon Musk's cooperation and technical relationships with other countries is worth taking a look at." So, I mean, he just put it right out there. They're looking at Elon Musk. And I think the reason Biden said this, and this is the reason I think a lot of the Democrats are feeling this way, is because, Elon Musk was encouraging people to vote Republican in the primaries. And now he has a lot of political influence being the owner of Twitter. And he may not necessarily be as far to the left as a lot of them are. I still think Elon Musk is fairly lefty, right? I mean, you have to be to, be living in that area and getting along with those people. And I think Elon Musk does skew to the left in a lot of ways. But some things he said publicly, I really agree with and I really like. And whether or not we can trust him, who knows? But hopefully he's better than Jack Dorsey, at least when it comes to Twitter. So I'm back on Twitter. But I just can't believe Biden and the Democrats have the nerve to talk about, and this is the last thing I'll say in this video. I cannot believe they have the nerve, and I don't want to get political here, but it's got to be said. Biden has the nerve to speculate or to cast shade on Elon Musk's cooperation and technical relationships with other countries. Well, what about Hunter Biden? I'm just going to leave it there. So you guys let me know what you think in the comment section down below. Give the video a like and follow me on Instagram at Millennial Trades. And I hope you guys have a blessed rest of your evening. I'll see you on the next video.